Hello, everyone. The new AML regulations came out exactly 1 week ago. Well, I'm filming it on the 10th, but by the time it comes out, it'll be 1 week. And with this, I'm doing the episode that I promised, which is a deep dive into all the different platforms, what they do for AML. I wasn't able to do Logics and Boss. I wasn't able to find too much on it, but we dive into Scarlett, we dive into Finmo, we dive into Velocity, 3 different criteria on each of them and how they kind of stack up against each other. It is a heavier screen share one. So if you're sitting at your computer, jump over to our YouTube channel. I think you get a lot more out of it. If you're not, if you're in your car or whatever, don't open your laptop. I do my best to just kind of do it, explain what I'm showing on my screen. Either way, I hope this is informative, and I'll see you on the other side. Truth maybe is that every time you put a document in an email, that is the most vulnerable place. Hello, everyone. Welcome. We're going to get right into it here because I think there's a ton of stuff to cover. As a recap, we're going through the different tools, different AML, or I should say deal submission platforms have provided for AML. So I'm going to be reviewing 3 platforms. It'll be Scarlett Mortgage by Axiom. It's going to be Velocity by Newton, and it'll be Finmo by Lendesk. Kind of funny that it's product by something for all of those, but without going there, those are the platforms we're looking at. And of course, there's Logics and Boss. They probably have similar type products. Wasn't able to find as much on them. So for better or for worse, wasn't able to include it in this. I would have loved to, but just wasn't able to. And then across all those, what I'm going to be talking about first off is going to be kind of risk assessment. How do they do that? Next is going to be more know your client identity verification. And then finally, the third is going to be kind of PEP sanction list type stuff. PEP is politically exposed persons. I'm not going to go through all the regulation. That's just a disclaimer. So the assumption is you are somewhat familiar with the regulations and why these tools are even there. This isn't going to be a crash course on the new regulations coming. It'll be more so an evaluation of how the tools are being used to address this. Now, one thing that I think is interesting to note, none of them are the same. So none of them are identical. There's similarities across, the 3x3 matrix that we'll go through, but none of them are the same. And I think it speaks to the regulation a bit itself, or actually it isn't crystal clear. I think we're going to get a lot more clarity after October 11th, maybe a little bit after that when the regulator actually starts coming down and saying, hey, this was compliant or non-compliant. We're going to get very smart really quickly, and I think these tools will adjust. So I think, for now, people are kind of putting their best guess. But as we get smarter and smarter, as we interact more and more with the regulator, I'm sure these tools will change. So let's get right into it. The first criteria is that risk assessment. So as a reminder, usually it's good to do kind of a low, medium, high. It's not, again, explicitly in the regulation, but it's good to track that because that's kind of how frequently people have different policies of how frequently you should follow up based on that risk level. But it doesn't define what that risk level exactly means. It's more of a kind of feeling low, medium, high. And then also as part of that risk assessment is different reporting that you have to do. So this is a bit more specific. You need to report if you think it's a suspicious transaction. You need to see if it's a terrorist property, a large cash transaction, $10,000 or more, or a large virtual currency transaction. So those are all the different types of reports you need to be looking at. So let's get started. Let's get right into Scarlett here. And I am going to share my screen. Again, this will be a bit of a screen share heavy version, but I think that, it's worthwhile. And I'll try to do my best to describe it for the people who are just listening, maybe driving or something like that. So here is Scarlett, and you can see this is actually on, of course, the broker's side of things. We'll talk about, the alternative being the borrower side of things, how the different platforms have addressed that. But for Scarlett, it is on the broker side of things. And you can see in their area here, their FinTrack area here, there's a lot of questions here. So they kind of, I think, split the gap between the other two, Velocity and Finmo. You'll see in a second. This is kind of, I'd say, like a medium amount of data that it's asking for. So it is asking explicitly for those things that we talked about, that risk assessment, but it also has a few other questions like how was the transaction delivery channels, the payment methods, or the down payment. And hey, was this a non-resident? Is the geography a higher risk jurisdiction? Those are things kind of mentioned in different trainings. So they have those questions there. That's kind of middle of the road. The thing that I'll quickly mention with this, and this is actually a really important point I want to hit right off the top, and why I actually wanted to start with Scarlett, is they have this generate PDF report. So as you can see here, they're giving you the option to download it, to own it. It's yours, right? And I talked about this a bunch on other podcasts, so I don't want to get into it too much. But this is exactly what I'm talking about in terms of the independence that you need to be looking for in these different platforms. So Scarlett is providing that, which I really, really appreciate. If you look at the other two, Finmo and Velocity, I wasn't able to find that same export. Maybe I'm just missing it, but I wasn't able to find it. And so what they're doing is they're saying, hey, this is Finmo and Velocity. And I get why they're doing it. You can use these tools that we've developed and put a lot of effort into, but your brokerage also has to use it for even to be useful. And if your brokerage is using it, then they're probably going to mandate it across all the agents. And so this becomes a tool to ask, first of all, brokerages to use it, but then maybe even more importantly for then those brokerages to mandate the use of their submission platform. So a very subtle point, but a very important one, and one to think about. It looks like Finmo and Velocity kind of chose the other way, mandating, fine, that's your choice. Scarlett's chosen, it seems, the more independent way. It kind of has always been their brand flavor, and we can see it here. So that's very interesting. Okay, let's keep rolling. So I said it kind of split the gap. Finmo went a little bit more on the, as you can see here, heavier on the questions. Now, they engaged a third party called the AML shop who has helped people with FinTrack regulations in other industries, because these aren't new regulations. And they put together this list of questions. So I think this is a cool one. Again, this goes to, I think, the way Finmo thinks about software development, where it's a little bit more opinionated. Instead of just saying, okay, these are the regulations, we're going to throw it up, they want to add a layer. They want to add a little bit of expertise and say, no, we actually consulted. We kind of know what the right questions ask. We are going to ask questions, and then we'll determine the risk assessment based on these questions versus you just putting in that high, medium, low. So I think that's, an interesting thing there. Quite a few questions, but, it depends, I guess, on your preference for that one, I would say. I think in some cases this is good. Other cases, maybe not. I think the case where it's not as good is if, maybe they miss on this. As talked about earlier, we don't know exactly. It's not super explicit in the regulation. And so if things change quickly, this will be harder to pivot than maybe some of the more lightweight ones. But if it's not, if they're right, if they got it right the first time, this might actually be quite a bit more valuable. Takes the thinking out of it, does it for you. So interesting thing there. And then Velocity finally as the third one here. They went a little bit, probably the lightest possible weight. They literally just asked the questions you need to ask. So those 4 reports, that's what these ones are down here. And then a low, medium, high, and a little bit of an explanation there. This stuff here talks about PEPs and identity verification, which we'll get to as the second and third points, but they kept it super lightweight. And so this is kind of the opposite of Finmo. You're going to have to do a bit more thinking as a broker for sure. Kind of say, okay, well, is it high, medium, low? I don't know. You're going to have to do that thinking. But as a platform, I think they might be able to pivot quicker if things change or if we learn new things about these regulations. So that's interesting there. Okay, let's go to the next one here. The second thing I want to talk about is that know your client identity verification. So I do have the regulation open. I'm not going to go through all of it because, it's a big one here, but there is a KYC, and it's just basically asking you to identify any person or entity for these types of transactions. It also talks about ongoing monitoring and third-party determination. So if a third party is basically involved in the transaction there. So I'm not going to go into these ones. This is kind of the heavier part of it, saying we need to be able to identify the person or entity, right? So that's a really key point that I think I want to touch on a couple of these. So let's start it was Scarlett, Finmo, Velocity. Let's start Finmo for this one here. So for Finmo, what you can see here is they have basically 2 things you can do with this Know Your Client. And so the first thing is you can do identity verification. So this is like a service where you can actually send it to your clients. They can get it on their phone. They can take a picture of themselves or their license, and it verifies it's that person. They do it through a third party called Persona, which was newer to me. It costs about $5 a pop to do it. So there's that option. But you're also able to really verify your identity in a lot of different ways. From the webinar I watched of them, they weren't too opinionated on it. They kind of say, do whatever makes the most sense for you. But you can see they do give you the option to just manually put in where it came from. Maybe, the credit file is honestly probably where most of the time you're going to identify the identity because you're already pulling credit. And if they have, I think, 2 years, that's enough to verify the identity. And they do allow you to put a bit more details in. So this is, again, kind of similar theme as below. You have the option to really kind of record it. And it's a little bit more, on that side of things, put more stuff in here. So same points as before, if that's good or bad. So you can see that there. And that's really kind of what they've put together here. Now, a really key point, all these I talked about is or entity, right? So it's not just the person if it's individual, but what if a corporation is on that mortgage? Well, you need to be able to adjust accordingly. Finmo has something actually more so in the application to say, is this a business or legal entity? Yes or no. So is Tom Tester a business or legal entity? I say yes. But what I didn't quite see, and again, I'll show you actually some of the other solutions have a good option for this, is to say, okay, well, if it's let's say a business identity, and actually for Tom Tester, there might be actually multiple people, right? There's, it's 50-50, this corporation that's buying it, 50-50 owned by person A and person B. You probably want to do that KYC for both person A and person B. Here, it doesn't really seem to be able to do that. Okay, switching gears over to Velocity now. This one here for the KYC. Now they're a bit more opinion. I talked about Finmo, less opinionated as it comes to the KYC. Velocity is much more, and they're pushing in the direction of saying, honestly, we're kind of already doing this. You usually get the license anyways as part of your compliance package. You almost always pull credit. Unless they only have 1 year of credit because they're a super young buyer, I don't know what it might be, you're probably going to be good. So I think they said 95% of the time, you're going to be good doing what you always do. The other 5% of the time, yes, you can come in here, and they do use a provider called Fastkey. What they charge for that is $250. So Finmo is about $5. It's about half that, $250. Yeah, if you do the credit bureau, just very simple check off or not, or physical ID identification, you're in there in person, you saw it, you can do it that way. And then finally, Scarlett. Here, what you can see is this is kind of that KYC here. I can do the person, and you can see how is the identity verified. I can do, this, or I could do an IDV service or something like that. So I can kind of check off how I verified it. The cool part here is basically that part about the corporation or entity. So in the Finmo example, and also Velocity didn't really go into it, but you can only do one verification per borrower, quote unquote. But if the borrower is a corporation, you might need to do multiple verifications per borrower. It's a weird way to think about it. But again, if the borrower is a corporation, there might be multiple people behind that corporation. And actually, Scarlett does that the most I've seen of the three platforms again. So if I do say it's a corporation or an entity, I can say, yes, there are benefits. And I can add multiple, or I think I can go as far as I need to, but I can say there's many people involved in this corporation. So that's another interesting piece there of basically being able to handle those situations where it's a corporation as an owner. Okay, let's wrap things up. Let's talk about PEP, so politically exposed persons and ongoing monitoring sanction lists. So Velocity, I think this is actually I'm going to start with them, and honestly, it's their strongest. I really like what they did. They did two things really well. One, it's actually part of the application. So, that client journey that they send out. Both Finmo and Scarlett have a similar type thing, a customer-facing application. I think it's actually a big opportunity missed. None of them have incorporated really any of the ID verification in there, at least not what I could see. If I'm wrong, please correct me. But it seems it's all been broker-facing changes. Maybe that was just easier to implement right off the bat. But I think there's a big opportunity to say, just as part of the application, hey, just scan your driver's license before you hit submit. Velocity did that with the PEP. They did have an option on the consent form on that final page. They just have an option to say, okay, are you politically exposed? And the ability to put in some details there. So I think that was great. But the other thing that they do really well is for the PEP scan. So basically comparing it to lists of known lists. I think there's a Canadian one, there's a UN one of politically exposed persons, or sanctions, I should say. So it's PEP or sanctions. They're just including that. And I thought that was honestly pretty smart. Every time there's a new cost associated with something, people kind of clam up. And what you'll see in the other cases, the cost for these things are pretty low. I mean, I'll just give you an example. Scarlett is charging 65 cents. And so I think Velocity just kind of said, we'll take that. We'll eat the 65 cents. And if that just makes our product that much more appealing, we'll be willing to do that. So it's upfront, but also the ongoing monitoring. So that's kind of talk, depending on that level of low, medium, high, you need to regularly monitor these people that you're working with. And, the PEP sanction list is a great way to do that. So maybe every year or 2 years or 5 years, depending on your policy or your brokerage's policy, you need to rerun that borrower through these lists. And again, Velocity is just kind of handling that for you. So really good job with that, both in terms of the product, customer facing, but also just the idea of how they're going to market with it, making it free, making it automatic, really gives a good feeling to the end user. Let's jump over to Scarlett next. For them, they do, I just talked about it. I don't think there's anything too crazy to report here. Again, this one's kind of just, not too much. It's 65 cents I talked about, and it can be included as part of that. And finally, Finmo, I think, is very similar to Scarlett. You have the option to do a screen, run it through a list. A service provider does that. They charge actually $350 for this screening, and you actually have the option to also look for adverse media. That's $4.99, so a little bit more expensive, but that's also done through Persona there. So for both Scarlett and Finmo, I didn't see a ton of stuff in terms of that ongoing monitoring. I think they're kind of just more wait and see at this point. But again, that's more set at your brokerage level to say, okay, a brokerage says, hey, we need to rerun the lists if it's a high person every year, or if it's a low person every 5 years, right? So that's more at the brokerage level. And I'm sure they're going to, hey, based on what the brokerage sets, roll it down to the agent level as well. Okay, so I'm not going to give, I think, any kind of final grades about it, because I think there's pros and cons with each of them. I think it was a very tough task and poorly defined regulations and a relatively short time period to get these out. I think, all of them had to take, I guess, prioritization to say, we're going to do this now and save that for later. And honestly, all of them are very functioning and, pretty good solutions. So I think you can't go wrong with any of them. Like a lot of these things I say, it depends on your preference. Some of the things that really stood out between the different solutions where, if I just rattle off the top of my head, this is just me off the cuff. Scarlett really provided that independence and good handling of corporations. That's where they were strong. Finmo is really strong. If you really wanted to have more of an opinion of how to assess risk, they give that to you, and that was great to see. And then third, Velocity, I think they handled the PEP side of things, the politically exposed person and sanctions list, the best way. They incorporated that in their front end in their client-facing application, and they made both the initial screening and ongoing screening completely free. It just, it's such a nice feeling. Hands off. I don't have to think about it. They're just going to do it for me. I think that's great. So that aside, if you've made it this far, we're about 17 minutes talking about regulation and tech. And so hopefully if you're still here, you're passionate about this stuff. So I'm going to take 1 to 2 minutes of your time just to go on a small, personal rant here, I guess you could say. I was watching a lot of these videos about these different things, and the one thing that stuck out to me was something that Dong Lee said. Of course, Dong is now part of Scarlett / Axiom, and he really started his presentation saying, hey, this is inflation. He called it regulation inflation or something like that. He had a better way to call it. But it's true. I mean, the cost of things, the cost it takes to now complete a mortgage application just went up. The time it takes, the tech you need to use, the different things you might need to go through in terms of screening and identity verification. These are all things that didn't exist a year ago, and now they exist today. So the cost to you as an agent, as a broker, just went up to complete a file. And inevitably, of course, these are just the rules of economics, this will lead to less brokers, right? There's going to be a list of brokers who are just kind of just making enough to stay by. And now with these regulations, it's enough their time, enough their money that's being sucked. It's going to make it unprofitable. It's going to make more sense to go to the bank or wherever else. Brokers will leave the space because of this, and that's going to lead to less competition. So I don't think it's necessarily a great thing. I think, the default is saying, hey, yeah, we want to catch these bad guys. And of course we do. But there's always a trade-off. That's the big thing I wanted to maybe get out of this rant, is to say all things have trade-offs. And I don't think we have enough of that conversation in Canada as an industry to say, yes, these regulations are here and we understand why they're here, but what's the cost of them? And a few episodes ago, I had Dan McDonald on, and he was talking about just the complete lack of competition in Canada as it relates to tech. And my opinion is, these types of things are causing that. So I don't want to leave things on a somber note, but I just wanted to kind of put that in people's ear. One man's opinion, take it for what it's worth. But hey, we want to decide what kind of future we want in this industry and for the tech in this industry, and these things affect it. So let's maybe on a cheerier note, I hope this was a useful kind of deep dive. Again, kudos to all these platforms, what they put together with the kind of the vague regulations and the short time period. I think they all did a great job. Pros and cons with each. And if you have anything to add, please throw it in the comment section below. Thanks so much.